First, let me extend holy greetings on behalf of everyone from Team ET Now, English and Swadesh.
Thank you, and same to you and Ayesha. Have a great time tomorrow.
So,
And
where are
yeah,
you
I mean,
joining us from?
we are on on Zoom, I think.
I've always seen people wear reds and whites on Holi, but it's a yellow. So, is this a market view also that it's a yellow light for the bulls or it's a yellow light for the bears?
No, no. Look, I mean, if I was going to wear red, you would have asked this, a question which was would be very, very loaded. And if I was going to wear green, then there's already so much green. There's no need to add to that. So yellow was, I thought, I was actually choosing between which t-shirts to wear, and I chose yellow. But it doesn't mean that there is a yellow sign on the markets, at least in the segment that I have liked in the last several months, and which is the small cap space. It is very much green, and I think it will continue to be green.
Say that because if we are moving towards a world where interest rates will go higher, then some would argue that big companies will be far more efficient and they will be able to do better in a rising interest rate environment.
Yeah, I agree. So that's conventional wisdom and conventional logic, but unfortunately in markets, and rather quite nicely, markets don't believe in conventional wisdom, conventional logic most of the time. So, all that is in the past. We have seen rising interest rates crush small cap companies. We know that. We have been through cycles. We know that rising rates are relatively less impactful on larger companies because they do not have much debt burdens. They generate free cash. And we understand all that. The reality of India as we speak right now is that, and I'm talking with reference to India, the rising interest rates will hurt basically the overvalued end of the market. Overvalued end of the market are basically two. This is large caps and it is the new age listings. The small caps, on the other hand, are not overvalued. If I look at a broad swathe of small cap companies and I look at their numbers, I don't find stocks trading at 40 times and 50 times earnings. I find many stocks trading in the single digit multiples at the highest. I mean, I'm talking 1 year forward numbers, maybe 10, 12 times, 2-time book value for 20% ROEs. That's not expensive. But the Hindustan Lever is still expensive. Asian Paints is still expensive. HDFC Bank, by any measures of the kind of numbers it has and what it will deliver, is reasonably expensive. And of course, less said the better for the new age listing. They continue to be expensive. So while conventionally small caps get crushed in a rising interest rate cycle, what will get crushed here, or what will not crush but underperform the markets, will be the large caps and the new age listings, not the small caps.
Do you think we've gone past the point of maximum pessimism, which let's say happened 7, 8 trading days ago?
I don't want to think that far out just yet. The situation continues to be very fluid. And if you're talking broad market, on individual companies in the small cap space, I think the worst is over for a number of them, where they made their lows, I think, 15, 20 days back. In fact, I was on a little holiday with some of my stock market friends in Goa, I think about 15 days back. And, I had said in that gathering of 7, 8, very smart people, that I said that I think the market has pretty much bottomed out for now, at least for a while to come, because all factors that had to happen on the wrong side had happened and markets had hit a low. And from that time, I think the recovery has been generally quite okay, including the US market, which recovered very well yesterday. India, small caps have started rallying even from 10 days prior. So I think the worst is over for that space, the small cap space, at least on a stock by stock basis. I don't think you will see 20-30% falls in a number of names in the small cap space incrementally.
Shankar, chutti pe bhi markets? I thought Goa was all about relaxation.
We were in the sea, okay? We were in the sea in our swimming trunks, and we were still discussing what is the next best trade. So when 8 guys get together without their spouses or significant others, that's the only thing they're going to be discussing, which is the next best trade. So right in the middle of the sea with water up to our chest, we were still discussing what's the next big trade. And small caps came out to be the consensus trade even then.
I've read the story of Samudra Manthan, the churn in the ocean. One side was poison, the other side was nectar. Let's focus on the opportunity which Samudra Manthan created. let's talk about what not to do in this market. With you, we always focus on what to do. For example, you've been advocating don't buy banks, and banks have not done very well. They've been underperforming. If I take the last couple of days of outperformance out, banks in general have not done well.
I think all these plays were so, the drum beats were so loud that they were going to compound forever and 20% and all that. I mean, when those things start to happen at stretched valuations, this movie has played out before also. Hindustan Lever movie played from 1998 till 2010 when the stock delivered precisely zero returns. ITC, I don't want to mention that name, but has had a very checkered career as a stock being all over the place, but lately not even all over the place, been very flatlined over the last couple of years. HDFC Bank has flatlined for I think 2.5 years now. Kotak Bank about that. I mean, autos, of course, less said the better. So a lot of the much haloed companies have really been the worst places to be in, merely because there was so much consensus that they buy them and forget them, and you will be forever compounding 20%. Unfortunately, it's not that simple. Investing cannot be brought down to these kinds of boilerplates, because those boilerplates didn't even make Warren Buffett any money in buying Coca-Cola, which has underperformed the market from the time he has bought, versus Pepsi, which has done 4 times better than Coca-Cola. So forget about us lowly people. Warren Buffett had that one-line boilerplate of buying great brands. Even that has not done him any good. So in India, all these stocks, I mean, 50, 60, 70, 80 times earnings, when we were looking at them a couple of years back. I mean, it was impossible that they would compound at those multiples, because the earnings growth, therefore, if you hold the multiple as a constant, earnings growth that they needed to deliver in aggregate was going to be 15, 20%, which is impossible to sustain because the sizes of these companies are significant. If you just do broad thinking, their sizes relative to GDP, their profits relative to GDP are really sky high. If they continued growing like that, and that is economic theory, these will become equal to the GDP. Okay, I'm not saying that they will, but that's the economic logic, that single companies cannot keep growing at the same rate forever, because at some point that they will become equal to the GDP, which is simply not conceivable. So all the factors pointed to their underperformance. So, I mean, I'm not in the least surprised.
Shankar, every crisis also creates an opportunity, and the famous one here is that when COVID struck us, the world started moving towards digital adaptation, and look at where IT companies today are in terms of growth and in terms of the business they have. This current crisis, which is for the world not a geopolitical crisis but more like an energy shock, do you think it will change the way how energy consumption will be moving, how every country will now become more self-dependent in terms of trying to identify more energy sources, new energy sources?
I don't think that is, I think every country has been wanting to become energy independent. I mean, that's been there. I don't think that's going to be the play here, Nikunj. If you ask my question, if you ask my view as a political analyst, forget a stock analyst, my view is this will reshape the way countries do business with each other. This will make countries even more inward focused, because they have seen the risk of being reliant on global systems like SWIFT and global container companies, which can be swayed and switched off at the whim and fancy of a superpower which doesn't agree with whatever you are doing. And I'm not saying Russia is doing the right thing or the wrong thing, but you can be held to ransom overnight. So I think this will spur greater investment in more technology-driven businesses that de-risk your country and firewall your country in cases of your falling out with one of the two superpowers. That is going to be the real play there, not really finding oil and gas, because I mean, India has been trying to find oil and gas for decades. I mean, it has not found anything meaningful, barring a few finds here and there. I don't think that's going to change overnight because of this crisis. What's going to change is more focus on your your financial systems, your payment systems, the networks through which your monies flow, the networks through which your trades flow, the international trade flows. That's going to be the focus area for governments. At least that's what I think I would do if I were the Prime Minister of India, or for that matter, any other country.
So the trade for the first half of this year was long energy, long commodities. Will that spill over to the second half as well?
So typically commodity cycles, if you look at, again, I'm not a big believer in all this because all theories can go out of the window. With that caveat, most commodity cycles last, between 2 and 3 years because of the reason that I've always said that everybody likes a bull market in all asset classes except commodities. Commodities are a hated bull market permanently, barring, let's say gold, which Indians love. But excluding that, soft commodities, everybody hates if they go into a bull market because that increases the price of your foodstuff. Hard commodities like copper or, even oil, etc., people hate because if they go up, the input cost of everything you buy on a daily basis goes up. So the only hated bull market in this world is the commodity bull market. We love a stock bull market. We love a real estate bull market. We love a bond bull market because they actually make us richer. Commodity bull markets make most of us poorer except the few commodity producers, which is why commodity bull markets are shorter lived than equity bull markets because everybody in the world then wants to kill that commodity bull market. So if you go back in 2008 when the commodity bull market was similar, oil was 150 and all kinds of soft commodities were rallying like crazy. The world found newer technologies to get oil. Shale became a big thing. If you go back, they started saying that the cost of extracting shale oil came down as more and more companies started to go into it through fracking. So the world will find ways to kill commodity bull markets because the world does not like commodity bull markets. And commodity bull markets are exactly the opposite of an equity bull market. When they rally, inflation rallies, rate cycle tightens, and therefore you have a bear market in equity. That's what we have been seeing in the last 3-4 months' time. So in my view, this rally in commodities may be short-lived. I don't think it's going to be a 2-year incremental from here. I think at tops, maybe a few months from now, you may see a topping out of this. But, we are sitting in March here. 6 months can easily elapse before any sort of crash in commodities happens. We need to wait out this period. But I don't think this is a 4-5 year bull market in commodities. We already spent 2 years, maybe another 6-8 months. That's a typical life cycle of a commodity bull market.
Shankar, do you see Indian markets somewhere in 2022 making a new high and then sustaining that new high?
I don't think so.
That was a point blank no. Why is that?
I don't think the markets will make a new high. I think many stocks will make a new high, and I'm interested in stocks because I'm not buying the Nifty, or I'm not buying the banks or the autos or the consumers. Many stocks in the small caps are actually making highs as we speak right now. I think that's the space where you are going to become significantly richer. I've said that you're not going to go from a penthouse to a slum if you buy HDFC Bank, but you're not going to go from a slum to a penthouse either if you buy HDFC Bank. So, most people who are new entrants, I'm not saying they're living in slums, but I'm just saying that they are not living in penthouses. They are living in one room or two-bedroom places. If they want to go to the penthouse, they will need to go to the small cap end of the market. And there are many stocks that are making highs there. I'm extremely optimistic about that end. But headline index, I would be very, very hesitant in saying that you will see a new high on the Sensex or the Nifty this year.
I have a follow-up question that Shankar Sharma already lives in a penthouse. Why is he buying small cap stocks? Shouldn't it be about capital preservation for him now?
How about a villa? I just saw a beautiful development. But that's a good point, Nikunj. I agree. I think that's a very valid point. You have me there.
Shankar, just to shift gears and talk about a pocket which you always said that the India romance is around consumers. And right now there are two challenges for consumers. One, prices are expensive. B, they are going through a commodity inflation cycle which are impacting their margins. How do you see the consumer space moving and changing given that there are too many moving parts?
I think that's a serious problem. And not just consumers. I speak to a lot of companies, and which is the reason why I hesitate to call out a new high in India this year. Okay, it will happen at some point. in the future, but I'm very hesitant to call it new high in Indian, the headline index Nifty or Sensex this year. The reason for that is there is a genuine problem that our companies face right now. I speak to a number of companies, input costs are really skyrocketing because obviously commodity price rises as well as supply constraints, container movements. And that has been a problem last 2 years, but that's become very excruciatingly painful in the last, few weeks time. So that is one major problem. End product pricing is simply not possible to raise because consumer resistance exists across industries. Okay, I meet several companies, speak to several companies, and end consumer is not willing to pay up. Okay, therefore you have a margin squeeze, and that does not portend well for overall. If you talk broad aggregate corporate earnings, this year may well be a disappointing year rather than an uplifting year for us, because last couple of years have been decent, but this year could be a reversal of that, which is what leads me to my view that a new high may not be possible. It's the problem. And the other thing is the macro part, which I don't know whether you're going to ask me that question or not, but India right now sitting at a juncture wherein a few factors appear very problematic. I mean, inflation clearly is a huge problem. Because of oil and commodity, and the soft commodity end has been also very, very strong, as we all know. That is major problem. The second is the currency itself is reasonably overvalued. So compared to a lot of other emerging currencies, Indian rupee has been stable. That itself, while it looked good for a while, it can become a problem because it can, obviously suddenly fall to 80 or 85, which means that your inflation gets spiked even more. So you have a compounding effect of rising inflation. Rising commodity prices and a falling currency, which then raises your domestic rupee prices by even more, which again compels the Reserve Bank of India to tighten. Uh, while I think it is very, very hesitant to do that, barring Dr. J.R. Verma's dissenting note, otherwise the consensus that we stay put. But I don't know how long they can stay put. So those are the challenges companies face, and those are the challenges India itself faces as an economy right now.
Shankar, where do you see this entire debate on ICE versus EV settling? There is merit, which is that nothing is going to change overnight, but there is also a strong view which says that EV is coming and eventually it will change your life in next 2, 3, 5, 10 years.
You mean electric vehicles, EV?
Electric vehicles, ICE versus electric vehicles. I mean, there's a company, Maruti, which is not going towards EV. Tata Motors is only thinking in terms of EV.
So again, all managements have their points of views. I mean, my view is that it is a shift which is definitely going to happen. It's a given. I mean, there's nothing to debate here. It's, I don't think there is anybody in this whole planet who thinks that the pie chart for EVs in India will not increase from whatever it is right now. As far as I know, it's only two manufacturers on the passenger vehicle side, but the number will increase, and the percentage of the overall auto ownership of through EVs will definitely increase. I mean, I don't see what is the debate here. Maruti's point of view may well be Maruti's point of view, but that's definitely not my point of view.
Shankar, how do you see this entire tech basket evolving? You've been vocal about the fact that some of the internet companies can fall 50% after a 50% fall. And we've seen that in case of Paytm. It is down now 70% from its all-time, from its IPO price. But let's keep the new tech aside. I'm talking about the traditional tech companies. They're generating cash, they are doing buybacks, they're still growing in double digit. Will money be made here?
Yes, 100%. I mean, that's the only area in the large cap that I feel fairly confident about. And again, I'm not saying anything very different from probably what the street believes. That area appears that if the Nifty does well, it will do well because of those rather than the other 60-70%, which look pretty much a fully baked trade. So IT services is still very strong. And if you're let's say, mutual fund or a large fund investor, I mean, you need to be in that space overweight, maybe 1.5 times overweight versus the benchmarks if you want to beat the market.
So, for our viewers and for those who look up to Shankar Sharma, and this is a traditional which we should not break every time when we have you before Diwali or Holi, you've been generous enough to share some ideas. So in markets, they say repeat cycles, and Shankar Sharma is known for not breaking traditions. And I'm also known for asking Shankar Sharma stock-specific questions ahead of festivals. So let's follow that.
But Shankar Sharma also known for not giving you a straight answer, isn't it?
But Shankar Sharma always obliges with some indirect indication. So tell us a bit about your portfolio. Give us a hint as to where do you think money is to be made. It may not be a short-term idea, but more like a medium to long-term idea.
So I like an ice cream company. I like a company which is into making some inputs for electric vehicles. Uh, you know, there are a couple of others also which are restructuring plays. I like a company that is into some areas of the overall tire market. So yeah, I mean there are some good names out there which look reasonably valued, not overly expensive. They are still small cap. I like one or two chemical companies. I like a couple of companies in the more like the tech space, not the new age tech, but the sort of tech space in India. So yeah, 8, 10 companies definitely, are companies that I like. I own a bit of them. So yeah, that's as specific as I can get, Nikuj.
So large part of your portfolio essentially is in small cap. You're avoiding buying into large caps right now.
Yes, 100%. Absolutely. I don't even know the price of a lot of the large caps now. I mean, I've stopped looking at them. There's no point in wasting time looking at an ITC or a Lever or HDFC Bank every day because they are broadly stuck in a trading range and they will remain there. If they start to rear their head up, we'll figure it out.
And final question, Shankar. There are two trades which everybody is talking about. First is IT, which you've discussed and expressed your views. But specifically, is there merit in assuming that India will do better than rest of the world? Credit offtake will come back. Commodity prices have gone higher, which is good news for banks. Is there merit in buying corporate banks now?
You mean the banking sector? Is there merit in
Banking
buying banking
sector.
sector?
I'm talking corporate banks specifically, not retail dominated banks, but corporate specific banks.
No, absolutely. I mean, I don't know who comes up with these kinds of wild theories. I mean, don't even think about buying companies with corporate focus. That has never done anybody any good in the history of banking. Forget about the history of India. We know how badly banks that have lent to corporates have suffered. The banks that have done well are retail-focused banks. I don't want to buy banks, so I don't even care whether they're loaning to retail or corporate or to both of them. I'm saying that's not the trade where you're going to go from a slum to a penthouse. So, I mean, my view is very specific. I'm not buying a bank, period.
Well, it may not be slum to a penthouse in your case, for penthouse to a villa, which I'm sure you'll achieve, considering that you are taking chances and investing is all about taking chances and understanding risks. So really appreciate your time. Have a wonderful Holi ahead and certainly look forward to much more of you going forward.
Thank you, Nico. Thank you for having me, and happy Holi to all of you at ET Now.